My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. My friends, I'm just trying to make you a little bit of money. My job is not just to educate, but also to entertain you. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. This market has the memory of a mayfly. That creates a ton of opportunities. So today, where the Dow gained 317 points, S&P advanced 0.39%, NASDAQ climbed 0.19%, after, by the way, looking truly awful in the morning. I want to help you find them. Time and again, I've seen growth stocks just get pummeled on some little bitty bit of bad news, some downgrades, some niggling nonsense about a quarter with less hair on it than I have, and the punishment doesn't fit the crime, if there's even a crime at all. This morning, for instance, Disney reported it was a terrific quarter. Theme parks much better than expected. Movies, fantastic. TV and sports real positive. But there was this one line involving Disney's streaming property. When it raised prices, there was some churn and subscribers dropped by 1%. Oh, no, the genius traders said to themselves. Netflix had no churn when it raised prices, so let's bury this stock. Sell. These wise men and women sold Disney down into oblivion. Not thinking about two things. One, Netflix is a beast, the best without compare. And two, Netflix doesn't have parks or cruise ships or even a fraction of Disney's intellectual property. I bet that in a few weeks, people will forget why they sold Disney stock down. And the stock, it will be higher. Same thing with Uber. You see, Uber won the war of pick up and deliver. The numbers reported this morning were extraordinary. But the experts found a line or two they didn't like. Next thing you know, they kick it to the curb, and you get an opportunity to buy some at a discount. I am confident about this one after interviewing CEO Derek Khosrowshahi this very morning on Squawk on the Street. I'll give you a little more on Uber's prospects later, but I think this is a good one. Now, we see this pattern constantly. Tesla will sell off over something. I don't know, maybe it's German numbers, it's California numbers, it's China business. I heard today that people have stopped buying Teslas because Musk turned out to be a Trumpist. I say, so what? He's going to solve the self-driving conundrum. Of course, Tesla always has some acolyte-loving person who comes on our air and blesses it and says it's worth $1,000 and it's off to the races again. And that will happen. That will happen. Now, here's an easy one. Spotify. This is a subscription business like Netflix that keeps on growing and growing and growing. It's the ultimate beat and raise stock. But there's always someone down there giving them the business. I saw it today when an outfit said Spotify's run too far and it's peaking. To which I say, based on what? I didn't see a thing in the piece that was convincing, but the stock still got knocked down in the morning. It gave you a great entry point before it rallied and ended the day in positive territory. Now, we saw this with Abbott Labs, ABT, not that long ago, when it lost a lawsuit involving a special infant formula that some aggrieved parents thought harmed their baby. The formula was made by Abbott because women sometimes just can't produce enough milk. Abbott only made $9 million a year on it. I think that they actually, on this formula, I think they do it at the behest of the government, or they're just literally out of their hearts, but it doesn't matter. They lost a $500 million lawsuit. $500 million. And now I told you to dismiss it, not worried about it. Sure enough, what happened? Abbott stock is now up more than 30 points from that event. I've seen this happen endlessly with American Express, AXP too. It'll creep up, and the fact that the millennials and the Gen whatevers love it, and then it reports on a sleepy Friday. It always reports on Friday. And everyone runs from it like it's got the bubonic plague. But 2 weeks later, American Express is up from where it was before the quarter, and people have forgotten why they sold it. Same deal with Marriott, growth hotelier. It heads down after reports, then soars when people realize it is the best hotel chain out there. I even see this with Costco and Walmart, the two best retailers in America. When Costco reports, people tend to be repelled by the quarter. It could lose 100 points, only to start the trek higher again, as there was no reason to sell the stock in the first place. Someone will always find fault with Walmart or say it's run too much, and they'll sell it down. A week later, another analyst will remind us of the buying opportunity that it is, and we'll jump at the chance they both hit all-time highs today. Finally, it's cybersecurity. Just over 6 months ago, a glitch caused by CrowdStrike seemed to stall the whole world. Then the CEO, George Kurtz, truly an indefatigable gent, visits 130 companies in 100 days for a genuine apology tour, and all's forgotten and forgiven. In response, the stock quickly takes out its old high. Can you believe this? Cloudflare and Palo Alto Networks, they're comeback kids, too. Every time. Oh, and let's not forget the ontologists at Palantir. Those guys can do no wrong, especially in the eyes of their buddy investors. Now, if you buy these every time they get hit, you'll do well, because they shouldn't be hit in the first place. So you're probably saying, can it really be that easy? I mean, why aren't I a millionaire? Well, I'll tell you why. because there are landmines, real landmines in the yellow brick road. Times when the dips are merely the beginning. So I'm going to spell those out for you, too. First, you have to ask, is it dependent upon China in any way, shape, or form? That's been the kiss of death for a really good casino company, Wynn Resorts, and for Estee Lauder, the mess of a cosmetics company. The one sharp as attack people, actually, Danaher, who've lost their way and don't even know it, have been bashed by China. Oh, let's not forget how well Merck could be doing if the Chinese government didn't slow play the rollout of the Gardasil vaccine for no particular reason other than, forget it, Jake, it's China. And as China... I mean, honestly, what the heck happened there? We're worried about Apple now, which has to be one of the largest employers in the entire People's Republic. The Chinese Communist Party is now going after Apple for the service stream almost as hard as the U.S. Justice Department did under Biden. Oh, and anything chemicals. Those need Chinese orders desperately. Second, can the GOP just one drug stop the craving for the product? Hershey bars, donuts, Camus, all the Johnny Walkers, Jack Daniels, Casamigos, Oreos, Twinkies, Lay's potato chips, Frosted Flakes, Fruit Loops. If it tastes good, the stocks of these creators are out. Third, department stores of any kind. Doesn't matter. Kohl's, oh boy, try saving that one. Macy's, no thank you, although I sure wish it wouldn't so. Let's expand it. Does it sell in department stores? Capri, PVH, Tapestry, sold to you. Sell. Nothing's foolproof. I wanted to put a video on the Always Right story, but what if Amazon says tomorrow that it's developed its own chip to lessen its dependence on NVIDIA after the DeepSeek scare? I thought Ferrari might work, but that thing's gotten way too high. In the end, it is a car company. Vertiv fit the bill because of its data center affiliation, but that's become a battleground, too. We don't need no stinking battlegrounds. Bottom line, always remember that there are indeed Teflon stocks in any market. The key, don't buy them unless and until they get knocked down. And then remember, they'll get up again. You're never going to keep them down. I need to go to Chuck in North Carolina. Chuck!
Booyah, Jim.
Booyah, Chuck.
Thanks for taking my call. With the recent market volatility, I'm looking to add a stock with a sustainable dividend. And if not this one, maybe you could recommend another, but I'd like to have your opinion on adding CVX Chevron to my portfolio.
Yeah, boy, that's a great one. I'll tell you why. Mike Wirth is just the CEO. He's committed to that dividend like no other. They've got giant cash flow. It is not a problem. It's one of the safest dividends I know. I bless that investment. Sharon in Minnesota. Sharon.
Hey, Jim. I hope your family's doing well.
Absolutely good.
The question, that's great. The question that I have is about Salesforce. It's going to report soon. It's close to its high, and I'm wondering whether it's a good time to buy now or to wait until after.
I actually think it's okay. There was a really terrific piece out by Morgan Stanley yesterday about what the clients are doing and how great it's been, Agent Force has been for them. It's such a winner that I smiled. I said, oh, my God, Mark Benioff is going to do so well. I think you stay in the stock, and if it gets hit, I would buy more. That's how much I believe in their Agent Force. It's terrific, and thank you for the call. How about Lonzy in my home state of New Jersey? Lonzy.
Hey, how you doing, Mr. Cramer? First-time caller. Been following you since my financial class back in '97.
Oh my God, I've really been around. Wow. Well, let's go to work.
Hey, man. Just wanted to know what's your thoughts on Marriott, and are they the top dog when it comes to lodging and hotels?
They are, and I don't even mind that the stock is 3 points off its high. You buy some, and then you let it go down. It is at 30 times earnings. That is a high multiple for Marriott, but the travel thesis is so strong. You don't know when you're going to get in, but you buy some. You don't buy all of it right now. You buy some. That's the prudent way to do it. All right, listen to me, people. Nothing's foolproof, but some stocks are more Teflon than others. The key is to buy them when they're down because they won't stay down for long. On Mad Money tonight, Alphabet is down 7% after crossing the tape last night. I'm eyeing the tech's giant CapEx commitment and how it could affect the stock moving forward. Then, what's the road ahead for Uber? I'm getting a read on the ride-sharing company after the stock slid on the report. And later, I'm checking in with the CEO of Columbia Sportswear to hear if today's post-earnings dip could be a chance to buy in a turnaround story. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.